Hello, I'm Stephen Ho, trader and founder of The Stop Hunter, and welcome to my weekly look at the gold price through the charts. I'm going to dig into the technical analysis to find out what's going on and where the price could be heading next. Let's take a look. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So some sentiment first. At the bottom we've got our seasonality. You can see we're currently in dip over there on the right hand side, so a bit bearish there, but then things do start to improve through December and into the spring. Now, more interestingly, on the COT, commitment of data, traders data, we've got the red line, the large commercials, black line, large speculators. Normally that black line corresponds with the price above, but this week we've got a divergence, but that's because this data is reported weekly on a Friday, so we might see that line drop tomorrow, so that's one to watch. If it doesn't, it still means that those guys are still bullish and expecting a correction back up bullish wise, so something to watch tomorrow. And in terms of the weekly look at the price on the line chart here, then we can see that the price failed to break upwards and has pulled back into that yellow shaded box between 1840 and 1670, and drew on a couple of purple lines there to show you a new wedge pattern forming. It's got 4 or 5 touches on the upside, so breakthrough there, and it could be up towards the 2000s, but at the moment it's looking comfortable, like I say, in that yellow box area between 1840 and 1688, 1690. And my line break chart, remember it's 4-2 set up here for more aggressive entry in. Well, you can see there on the right that point is 1870, so if this trend, this small short downtrend we're in at the moment, reverses, that would be the price according to the 4-2 setup that I would get back in at. And the daily Heikin-Ashi chart is still showing that sideways range, which you can see with the 2 standard deviation regression bands shaded light blue and that salmon pink colour. But if we go to the signals at the bottom, both are bearish at the moment. Volatility slightly up at 13%, but heading back towards its longer term moving average around 10-11% annual. And volume bearish at the moment, but not too much of it, hovering around its longer term moving average. Now in terms of price action, it's back within the 2 pink line box breakout system, so we haven't got a signal there. It's all looking a bit flat at the moment. And the Renko chart, I've used a $5 block size. Just zoomed out the chart a bit as I've moved the Fibonacci lines further back to 2 blocks of support around about 1680 that look significant to the downside, and all our signals at the moment are sort of in the bearish area, starting to maybe warm up a bit. In terms of price action, we're still in that sell signal from the 2 line pink box breakout setup, and it looks though that the price has got back into that noise again like we saw on the line chart, weekly line chart, and maybe just consolidating here as it hovers on the longer term moving average, thinking about possibly reversing back upwards, with targets of that first 61.8% line around 1820, maybe first stop, then the recent highs 1860 to 1870, and then it's got to push on up to those more recent highs in June of 1913 before it can think about pushing up towards the late 1900s, 2000s. And downside wise, well, I think we're going to see some support around 1770, if it does continue down before thinking about moving further down to 1730 area, and then like I said, that 2 blocks of significant support around the $16.80 area. But at the moment it's gone back into that range and looking a bit dull at the moment. I've put gold back to neutral again this week as the price has come off and gone back into that range. If we go to the top right hand side, the sentiment indicators pretty neutral if you net them out, and I've got the 4-line break target to the upside of 1870 as an entry point. Heikin and Renko both pretty neutral with a tinge of bearishness, and if we go into the targets, upside 1.5, 2.75 to 1. The downside still looking pretty tasty, 2.25 and 5 to 1. But overall it's back to neutral at the moment. So gold for those range traders is a lovely beast at the moment, between $1,900 and $1,700. That's $200 leeway either way, giving plenty of opportunity. But if you're a trend trader of gold, I'm afraid it's back to neutral, sitting on your hands, because it really doesn't want to go anywhere in the long term at the moment. Let me know in the comments below where you think gold is heading next. Is it bullish, bearish? Let me know your thoughts. Love to hear from you. And if you've liked the content and the technical analysis I've used in the video and want to learn more, I'll put a link in the description below. And if you've liked the video, please give us a like and hit that subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.